Oil is tumbling again, but look on the bright side. Gas is $1.90 on this energy edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Thursday, January 7th, 2016, and joining me to talk all things energy and materials is Tyler Crow and Taylor Muckerman. Happy New Year, guys.
Happy New Year
You too.
Anybody do anything crazy?
In the studio.
Back in studio after a couple pre-recorded shows.
I forgot what you guys looked like, actually. I was like, who are these guys?
You mean you didn't watch our videos over the holidays?
No, I didn't.
Oh,
well, I was present, so it wasn't anything new.
That's messed up.
So nobody did anything cool over you didn't ski?
No,
Tyler?
man, it's really been a warm East Coast. There hasn't been a whole lot of options available
Knowing
to us.
you, I just assumed that you would find it.
Yeah,
If it could be done.
Sharif Suki's finding it.
Yeah, see?
Plenty of it. He's got plenty of time to talk about. We'll get into that later.
So diving right in here, it's been a pleasant year so far in the energy sector, hasn't it, guys?
Oh, it's been wonderful.
It's great.
Absolutely wonderful.
Oils went into the holidays in the 30s. It's actually now at new lows. I think 32.50 was the low today so far. It's up a little bit now. Kind of a dismal start, so we pretty much have to talk about it. Why is this happening? I thought we were kind of at the bottom last year.
We're always at the bottom.
Always.
We're always at the bottom until we're always at the top.
Well, you know.
Yeah, you always love those qualifying statistics. So it's like, well, this is the worst year oil start for, it's like the worst 3 days to start a year. It's not the worst 3 days ever. It's just the worst 3 days to start a year. It's like, well, let's
pick a day and time and find a stat.
This is the worst Tuesday or the third Tuesday in a month for I don't know how long. There's just so many of those that are just fascinating or stupid.
Didn't the slide start when Saudi Arabia and Iran cut ties? Was that kind of when things started sliding again?
I mean, it's tough to really say when they started, when they stopped, when they kept. Typically, you would imagine that would.
Well, you were talking before we were on air, and that's what I wanted to segue to. The chart you were looking at with terror and all that stuff.
So, basically, what it's sliding for is people are saying is that now Saudi Arabia is like, you know what, Iran. You're coming online, and we don't think that you're going to be able to do it because we're just going to sell it to Europe at a very steep discount. So they're basically undercutting Iran rather than like a military action against them.
Right.
They're just basically saying, up yours, we're going to cut prices specifically to the people that you're most likely to sell to.
So, and the market's taking this as basically the odds of OPEC coordinating they were really low before, but now it's like not even possible.
What's that?
The reason oil's falling is because when Saudi Arabia and Iran cut ties, they're like, there's no way OPEC's going to even talk to each other.
There's so many reasons why oil's going down. I mean, there's that. Where everyone thinks that OPEC's losing their mind and they're, a herd of cats that are going to go off and go do their own thing.
These are arguably the two most powerful countries in OPEC, and
then you're starting to see
they were never very amiable to begin with, and then you go off and behead a foreign national from Iran. And,
then you got inventory data where people are losing their mind over inventory data and all these things. Everybody's losing their mind after watching China's stock market fall over the past couple of days, going, oh, China's falling into a pit of despair.
We need an oil circuit breaker.
Yeah.
Yes.
We need a circuit breaker for oil price sell-offs.
We were Crow and I were upstairs earlier. We were talking about, I was like, this Chinese circuit breaker for their stock market is basically a self-fulfilling prophecy, because when it falls to halfway down to where the circuit breaker would kick in, everybody's like, oh, it's going to happen, and then it just happens because everybody thinks it's going to.
They're scared that they won't be able to.
Luckily today they got rid of it. So yay. We'll see what happens with that.
Until tomorrow when they reinstate it.
Well, yeah, it's a little. We're just going to stop all trading forever. We don't like the stock market anymore. Tyler, what were you saying about? I asked you yesterday about the oil inventory thing, because I saw the release of crude oil inventories, and it was down 5 million barrels. I was like, oh, that's awesome, good for them. But then gasoline was up on 10 million barrels, and apparently that's bad, and I didn't even know about it.
I think this week we had a 5% move in oil, and the biggest reason that anybody could come up with was the fact that gasoline inventories in the United States had gone up by 10 million barrels after the week previous data that did crude inventory barrels said that we were down 5%. So everybody got a little excited, like, yay, the turn's starting to come. And then they saw gasoline inventories up.
So what does that mean?
Let's just kind of keep this a little bit in perspective here. So we'll say down 5 in crude, up 10 in gasoline. So we're net up 5.
Until that gasoline turns into CO2, it's still basically an oil stockpile.
It's some sort of petroleum stockpile. So we're net up 5. The United States burns through 15 million barrels a day of gasoline, diesel, anything that's made out of crude products. So we had an inventory build of 8 hours worth of production or 8 hours worth of consumption, and the market drops by 5%.
That just doesn't. That's insane.
I mean,
arguably,
it's one of those things where it's a law of large numbers where people say, oh, we had an inventory gain of 10 million barrels. And when you had 10 million barrels, like, holy cow, that's a lot of oil. But then when you put it in perspective of how much we consume and produce on any given day, it's not even a half a day's worth of consumption.
Right. So supposedly we're oversupplied in inventories by what, 200-300 million barrels, something like that. So that's a couple of months, right? Like
that's the hope.
Yeah, I don't know. Anyway,
long-term focus. Decline rates are happening. There's no there's lack of investment.
Sandridge delisted.
Yeah. So did they delist?
They're being taught.
They're pink sheets now, right?
It's in the process of being dislisted. So big names are coming.
Big names are falling
to the surface.
Right.
Production budgets are going down. It's not reinvesting. Decline rates are going to happen, and when that
for our
finally
listeners
catches
that may not
up,
know, really, like 30 seconds. What's a decline rate?
Decline rate is the natural decline of a well, where once you put a well into the ground and starts to produce, there is a fixed amount in that reservoir, and the rate at which it leaves, the pressure, the physical properties of that will deplete, and it means that the rate that's coming out of that declines.
It's like when you're emptying a pool, that last little bit of water
Imagine
does not come out fast.
the super steep water slide you were scared to go down at the water park.
That I'm still afraid to go down.
That's the decline of most fracked wells, where it's like
it's like 70% or something.
Yeah,
it's really
70% in the first year.
It's a frightening decline rate.
So as that decline rate happens, production will slow down. And demand they'll start to come into that equilibrium. Maybe demand will outpace for a little while, and prices will rise. We don't know where that balance is going to find again.
Because we're down. I think we peaked out at like 9.6 million barrels a day in the U.S. of production. Or I think we're down to 9.1. Have you seen any estimates of where we'll be at the end of this? Okay, no big deal. I was just curious.
And if we did, are we going to put any $1 million?
Actually, so let's shift from the supply side to the demand side. What were you just saying about SUVs before we came in here, Tyler?
Well, I'm not saying it. It was actually a lot of reports are coming out as of late. A lot of the major auto manufacturers are starting to report their November and December sales for the end of the year. And I think maybe to the surprise of few, SUV sales are absolutely booming.
Because gas is $1.90 for the first time in
$1.90.
5 years or whatever.
I think the actual
long-term investing.
There was on Bloomberg this morning. There was an estimate that $100 million or $100 billion has been transferred to the customer through gasoline savings over 2015. So that much savings, people
I think it's like $600 per household or something.
It's a lot of money nowadays, and it's just basically getting put into other things. And one of the things that looks like people are going to buy now are SUVs. Let's see. Just going over the big three, kind of doing a comparison of cars versus trucks. In 2015, the Fiat, General Motors, and Ford, their truck and SUV brands grew 22%, 16%, and 8.3% respectively.
That is white hot for cars.
Now let's compare this to their cars, sedans, smaller vehicles. Same thing. Fiat Chrysler, General Motors, Ford. Fiat Chrysler's cars down 19, General Motors down 14, and Ford down 0.9. So
people are buying trucks instead of cars.
Exactly.
My God. And I don't know, what's the average miles per gallon for a truck these days?
Not as good as a car.
20s. Not as good as a car, but we're looking at somewhere in the high teens to low 20s.
Yeah. So I would think 23, 24 or something.
And just running a number on it, and I hate doing this because it makes it seem like I'm kind of belittling the movement to hybrid and electric vehicles and things like that.
Which, of course, you would never do.
I don't want to do it because I think it's going to happen. The technology is going to come up one day. It's just not quite there yet. But just to give a little bit of perspective on growth rates, if we were to combine the large pickup trucks, like the largest, most popular pickup trucks, Ford F-150 series, Chevy Silverado, and Dodge Ram. For every one Tesla that is manufactured or was sold last year, there were 83 of those trucks sold.
Oh my God!
So you're just putting a little bit of perspective.
Where you at, Elon Musk?
Get to
step
work.
it up.
Just put a little bit of perspective when we talk about growth rates on some of these companies.
Well, there's also more scale to sell. Like Elon Musk is like pretty much tapped out from what they can
himself,
sell. I mean, they have more capacity to build into their factory, but right now they're running at pretty peak rates.
Does anybody know off the top of their head how many cars Elon Musk sold in the fourth quarter or third quarter? Wasn't it like 25,000 or something?
I got the
in
annual.
The quarter, no.
Annual was 50,000, I believe.
Okay, so yeah.
I may be a little low on that, but don't quote me.
Yeah, I think that they're shooting for like 500,000 out of that factory.
Within a couple of years.
In a couple of years, and for millions of trucks are being sold right now.
Correct.
So cool. Okay. Well, before we move on, I wanted to point our listeners to the newly redesigned focus.fool.com. There you'll discover a special offer to join the Motley Fool Stock Advisor newsletter for all industry-focused listeners. All loyal IF listeners have access to a special discount on Stock Advisor that works out to $129 for a full 2-year subscription. Once again, that is focus.fool.com. And our last story of the day, Carl Icahn, everybody's favorite billionaire corporate raider, gave himself some Christmas presents.
Hey, he's an activist investor.
Oh, I'm sorry, whatever.
Corporate raiders.
I
still
love barbarians at the
1980s.
gate. I'm sorry.
That's the greed.
I actually reread that because it was on my reading list. Anyway. Okay, so what he's basically kicking out founders left and right of these energy companies.
Well, I guess the people that he gets put on boards are kicking people out.
Yeah.
His mercenaries.
He's doing it by proxy.
That's right, exactly. But, I mean, these guys aren't necessarily leaving empty-handed. Jim Bob Moffitt, $16 million payout with $1.5 million per year.
And he's from Freeport-McMoRan.
Yes. Co-founded with 2 other guys, McMoRan Oil and Gas. I guess they merged with Freeport Minerals.
And then here we are.
And then they split, or then they remerged a couple years ago.
It's one of those great
now
things.
Now they're not investing in oil and gas anymore for the foreseeable future. So the company's been through more flux than pretty much any company I can think of in the energy space.
Yeah.
I don't know. You might want to put Cheniere Energy on there.
I guess, that's true.
You go from an oil and gas producer to a natural gas importer to a natural gas exporter in a matter of 15
importer
years.
And it's basically attempted all three and hasn't done any yet. Really. Like, I don't think he imported any natural gas.
They do. They have a couple contracts that have helped put a little cash on the books to fund the exports.
Yeah.
But yeah, it's been a terminal that never really met its capacity.
They never found anything when they drilled.
Yeah.
And they're still yet to export. But that being said, I'm a shareholder, so maybe I'm kind of glad that they're going to just kind of take the cash and maybe sit on that for a little while, rather than what he was hoping to do was double their amount of trains that they have by 2025. They have 7 coming online now, and he wanted 14 by 2025. So a bit ambitious, and obviously the board felt that way as well.
Yeah, I mean, at the time, with what Cheniere Energy's existing plans, if we talk about their Sabine Pass and their Corpus Christi terminals, the amount that they would process at that is equivalent to about 10% of U.S. natural gas production. So they were looking to move a lot of stuff.
Yes.
And bumping up to 14 would have been a huge move that,
could just another 10 more years.
That's a big change to the natural gas market that may not necessarily the market would be ready for.
And last but not least, Pep Boys. Anybody want to buy a auto parts chain or anything?
Long term, I mean, sure, it might do well, with all these trucks that are going to come on,
right?
And maybe break down on the side of the road. But when you have cars like Tesla, probably the wave of the future, with no fluids, no engines,
right?
What is Pep Boys going to fix and sell? I don't get it.
I
mean, Teslas aren't breaking down. If they're breaking down, they're burning to the ground.
Right.
Which
has happened 12 times.
You're not going to go to Pep Boys to fix that. You're going to go to Tesla and be like, give me another damn car. Whereas, I don't know, that's obviously a very long-term
He talked a lot about the huge opportunity to expand. So I don't know if he's going to open a couple hundred more Pep Boys everywhere. I don't.
I have no idea.
Just kind of looking broadly at the 3 big, we'll call them the 3 Christmas presents of Carl Icahn, between Pep Boys getting
I want my scalps.
Cheniere Energy's CEO and Freeport's CEO. Going into Freeport and Cheniere, it's we can cut costs, we can do all these things to get value out of these stocks. And the same thing, he's like, there's immense value in Pep Boys. But, looking at these commodity companies, it's hard to see how much more cost cutting can go on than what's going on, unless you're looking at rapid divestitures to just basically slice the company down. And
which could happen at Freeport.
We could.
With Cheniere, I think it was just pull back on the throttle.
Right.
Freeport, you could definitely see some.
Yeah, and it's just sometimes it's hard to see necessarily what exactly the thought process is when it comes to some of these things. I don't want to say that he's wrong in any way because I don't know. I mean, he's made a lot of money, way more than I ever will. So
listen, he's really rich.
He's really rich. But at the same time, I just look at these moves, and Pep Boys, same thing. It's like you look at comps.
It struggles to make money right now.
It struggles to make money, and even when you do comps to other service companies, it's not a high margin business in any way whatsoever, or the returns on capital aren't even that great,
right?
Compared to maybe somebody like an Advanced Auto Parts or an AutoZone, where you're just selling parts. The returns on that are much, much higher, and so I just don't see it personally.
There may
Pep Boys is going to be huge.
Welcome to the show, Trump. There's there may be something. I mean, there was like a bidding war for it.
Yeah,
I mean, they rebuffed him once. Then another company came in and like made an offer, and then he matched it.
And then
now it's his.
He's going to leverage it up. That's
we'll
how he's
see
going to
what
make money.
happens.
Maybe.
Because he's a corporate raider. Anyway, cool. All right, well, that's it for us, folks. If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that is industryfocus@fool.com. As always, people on this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Tyler Crow and Taylor Muckerman, I am Sean O'Reilly. Thanks for listening, and Fool on.